Good time to kickstart our special segment, Charting Trends. Rahul Sharma, Director and Head of Technical and Derivative Research at JM Financial, is with us. Rahul, good morning. Thanks for joining in. So I guess the market is at a very precarious position, right? On the fundamental side, we've all been talking about higher yields, what the dollar is doing. So, let's get that backdrop going first. The way some of these global asset classes are shaping up, and our Nifty that's been really trying to hold on to 19,500. What do you make of things, and do you think this can hold, this zone?
Yeah, so there are three things to keep an eye on. One is the relative positioning so far we've had with respect to the US markets. US markets are trading below their 200-day moving average, the key indices, whereas Nifty is still hovering around the 50-day moving average. So on a relative scale, we've performed better. Now, if the situation deteriorates from here, we could get into a time correction. Time correction would mean we spent more time. The moves are not as big as we've seen in the last few weeks. And at the same time, it's a downward spiral. Now, second thing is the broader market has not given up yet. So we are seeing the mid-cap index, the small-cap index, the NSE 500 index doing relatively better. 9 out of 10 times in the past, every time the broader market has not given up. And once the global volatility has settled, we've seen the markets come back with a bang. So I think it's a matter of time that once the global markets see some recovery, we also see. But before that, I think there is a bit of a pain in terms of a time correction. And thirdly, at 6-month highs, we are seeing the short positions by FIs in index futures are at 6-month highs. And we're seeing retail positions at 6-month highs in terms of longs. So clearly there is an extreme building up. Somebody has to throw in the towel. But I think a close below 19,500 would see further liquidation of longs by retail, or even increase in shorts by the FIs in the index futures. So my sense is below 19,500, we are heading for some more pain in October, which would mean that 19,200 is very much on the cards. But more than the number of points, it could be a time correction, which would be frustrating, especially for momentum traders.
And we are at 19,500, exactly almost at 19,500 as we speak. Rahul, hi, good morning. Okay, fair enough. Let's talk about a few stocks then. You're describing these two names as basically thrust stocks, momentum, I'm assuming, BHEL and L&T Finance. Describe why you like both these names.
Yeah, so we're looking closely at the stocks which are relatively doing better and exhibiting strength in a falling market. So, two sectors which clearly fall into this category as of the last week is one is the PSC, which has done very well, and second is the NBFC space. So on the PSC, we are liking BHEL pretty much. The stock technically has formed a rounding bottom, and there is a good possibility that the stock goes on to hit 150 on the upside. On a relative, on the other side, L&TFH, which saw an expansion in volumes on Thursday and Friday, is now seeing a breakout happening, which can also take to a similar target of 150 on the upside. So sectorally speaking, PSC, autos, because of the numbers are going to be announced, and NBFCs, select NBFCs are the ones to go for, which look particularly good on the long side.
Okay. Rahul, what are IT charts telling you? IT had this mysterious rally when everything was going against IT in terms of numbers and the management commentary. IT stocks had a great 3 months after the Q1 results, right? And now we've started seeing profit taking ahead of the Q2 numbers. What are the charts indicating?
Yeah, so we feel that this is merely a retest of the breakout area that the IT index saw in early June. So we've enjoyed like a good period from there, and now it seems like a pullback. So a lot of these large caps, especially Infosys, TCS, have come back to their crucial support areas, which means the risk reward is again becoming favorable for long positions at these prices. So we would put IT in a bargain area where we feel that this correction is a good opportunity to re-enter. And speaking of a slightly macro picture, we feel that the next 3 to 6 months, we could continue to see good performance in the IT space, given the kind of structure that the IT index is holding. So something like an Infosys can be bought at these prices. with a minimal stop loss of around 3% on a closing basis, and we feel the risk reward is decently good enough for a long position here. So IT falls into that category that it is one of those candidates where one can look to buy on this dip.
Okay, IT is to be bought, and that's something you'd want to do. Anything else, Rahul, on your list? Anything on the sell side, or not really?
Primarily it has been the private banks which have bore the brunt of the selling pressure in this entire fall. And on the contrary, the PSU banking index has actually held relatively very strong. So in case 19,500 does get broken on the downside, the likes of Kotak Mahindra Bank, the likes of HDFC Bank are the ones to go for on the short side. But if it doesn't happen, I would rather stay long in the PSU banking space where we feel the upside has just begun. So something like a Union Bank, something like a Canara Bank, or even a Bank of Baroda for that matter, can be considered on the long side where we feel there is more upside to be had in the coming weeks. So, it's at a crossroads at this point in time, but how we fare at the 19,500 level is what will decide, at least, the moment in this week going ahead.
All right, Rahul, thanks very much. It's always a pleasure having you with us here with those calls and, of course, that overall view as well on the market.